Hello all, a very good morning. So let us continue our discussion in supply chapter. Hi all. So we can continue our discussion, but let us have a quick recap of what we have discussed yesterday. So the definitions part, sir, we have discussed goods definition. Goods means every kind of mobile property. Good means mobile. It has inclusions and exclusions. It excludes money and securities. Money na cash and cash equivalents. Securities na shares, bonds, debentures, these things. You understand, right? Then when it comes to inclusion part, it includes goods includes every kind of mobile properties, that's fine. It includes actionable claims. Actionable claim means what? It's a claim to any debt. Actionable claim means it's a claim to any debt. Actionable claim to any debt. It even includes growing crops, grass, and things attached to the land, which are agreed to be severed before making supply. Then service means anything other than good, money, securities. Then, even though money is not neither a good nor service, but the transactions in money, which involves conversion of money in one form to another, one currency to another, one denomination to another, then that is called as then that is called as what? Service. Then service includes even facilitating or arranging a transaction in securities. Service includes even facilitating or arranging a transaction in securities, such as like the stockbroking commission, those paid. Then we discussed about related persons. Related persons now the members of same family. Family means spouse, children, parents, brothers and sisters, and grandparents. And if they are officers or directors of each other's business, or they are legally recognized partners, such persons are employer and employee. And a third person controls, owns, or holds directly or indirectly greater than or equal to 25 percentage voting power. Or a person directly or indirectly controls them. Or else a third party controls both these entities together. Okay, so these are common subsidiaries. And the next one is like if it's a joint venture, then they are related persons. If he is acting as a whole or sole agent or distributor of a person, then they are also called as related persons. Then the concept of distinct persons now, where a person has obtained more than one registration in a state, because he is having multiple place of businesses, or when a person is having more than one registration because he is operating in more than one state. So because of any reason, if a person is having multiple registrations, then each of such registration has to be treated as a distinct person. Then, where a person has obtained registration with respect to an establishment in one state and with respect to another establishment in another state which is unregistered, then both these establishments also has to be treated as a distinct person. Then we have discussed about consideration. Consideration means what? Any payment made or agreed to be made in money or otherwise in relation to supply of goods, service or both. You understand, right? Then it should be paid by recipient or by any other person, but shall exclude subsidies given by central and state government. Then we even discuss the other part of consideration, which is like consideration even includes any monetary amount or any amount paid for. It could be monetary or non-monetary also. Any amount paid or agreed to be paid, the same way it continues, for forbiddance to act, tolerating an act, or for non-performance of an act. So if for these things, if any amount is paid, that is also called as consideration. Then works contract. Works contract, it's a contract related to immovable property which involves both supply of goods and services. Then taxable person. Taxable person is different, registered person is different. Taxable person means it includes two parties, a person who is registered and even includes a person who has the liability to register, not yet registered, but has the liability to register. When the liability arises based on 23 and 24, then principal. Principal means a person on whose behalf an agent supplies or receives goods, services or both. Agent means a person on whose behalf, agent supplies or receives goods, services or both. Then online money gaming. Online money gaming it's a online game in which player pays or deposits the money virtual digital assets in expect of winning an event including a game, whether or not the outcome is based on the skill or chance. So you play a game online. It may be a game or scheme, whatever it is called. Okay, and for participating in that, you will be depositing the money or some virtual digital assets. You will be depositing money or virtual digital assets with an expectation of what? Winning the game or such a scheme, right? And that participation of game involves your skill or chance. Then that is called as what? Online money gaming. Then business. What's called business? Business means any trade, commerce, manufacture, profession, occasion, adventure, wager or any other activity of similar nature, whether or not for a monetary benefit. So you do any of these activities, trade, manufacture, profession, occasion, adventure, wager or any of these activities, and it may involve monetary benefit, may not involve monetary benefit. And even business includes the activities incidental to the above, and it could be called as business irrespective of volume, continuity and frequency. Then the activities of a club, association, societies providing to these members, that is also called as business. Then admission of a person into premises, so allowing someone into a premises with consideration, like allowing into museum, allowing into a monument or allowing into a park. So for all this there will be some entry ticket kind of that is also called as business. Activities of a race club by a totalizator, the activities of a club. Then transactions undertaken by government, so the transactions which are undertaken by government in which they are engaged as public authorities, so the government functions are also treated as business, right? Then we have entered into section 7. Section 7 broadly has three subsections: 7 subsection 1, 7 subsection 1a and 7 subsection 2. 7 subsection 1 talks about the situations or the conditions to be satisfied to call a transaction as supply. Once a transaction is categorized as supply, then by using 7 subsection 1a, we further classify such transaction as whether it is supply of good or supply of service. And again in 7 subsection 2, there is something called negative list along with schedule 3. So it's negative list. I mean what? Even though it is a supply as per 7 subsection 1, even though it is classified as either good or service, you understand, right? But if it is a transaction which is mentioned in 7 subsection 2, then it is not a supply. Okay, so then further in-depth discussion of 7 subsection 1. 7 subsection 1 has again subsections like 7 subsection 1 clause A, clause AA, clause B and clause C. What 7 subsection 1 clause A says like supply includes sale, transfer, barter, exchange, license, lease, rental, disposal. Supply includes sale, transfer, barter, exchange, license, lease, rental, disposal, carried out by a taxable person for a consideration in relation to goods, services, or both in the course or furtherance of business. So supply includes what? Sale, transfer, barter, exchange, license, lease, rental, disposal. Carried out by whom? By a taxable person for a consideration in relation to goods, services, or both in the course or furtherance of business. 5 conditions has to be satisfied to call it as supply. Very basic thing. You might have already learned this in the inter level, but again I want to get you remembered so well. That's why I'm repeating so many times. Supply includes what? Repeat along with me. Sale, transfer, barter, exchange, license, lease, rental, disposal. Carried out by a taxable person for a consideration in relation to goods, services, or both in the course or furtherance of business. Next, 7 subsection 1 clause A. What does it say? Like any person other than individual, carrying an activity or transaction with members, for cash or deferred payment, then it amounts to supply. So any person other than individual carrying any activity or transaction with a member for cash or deferred payment. For that we have an example also here. What it is like, so I have said about this principle of mutuality. Na something like the firm and partners are treated as same. The AOP and members are treated as same. So if that is the case, we have taken this example like where an AOP collects money from its members and purchases some goods, and those goods will be again distributed by the AOP to its members. So AOP distributing certain goods to members by collecting consideration. So whether the transaction between AOP and members amounts to supply? Yes, it is supply. Where it is mentioned? 7 subsection 1 clause A. Then 7 subsection 1 clause B. It's about what? Import of service. Does import of service amounts to supply? Yes. Import of service for a consideration is supply, irrespective of whether it is in the course or furtherance of business when there is consideration. But there may be situations with consideration, without consideration. So we have discussed both of them, for a consideration and no consideration also. For a consideration, then it is supply. Even though it is supply, import of service for a consideration, it's always supply. Even though it is supply, when it is not in the course or furtherance of business and the recipient is government, charitable entity, or an individual, then such service is exempted. So don't think it is like supply and exempted are same. Deciding supply is the basic step. Once you decided as supply, then again we'll think of about whether it is taxable or exempted. Right? You getting my point, right? So understand, import of service for a consideration, irrespective of whether it is in the course of furtherance of business, it amounts to supply. The same import of service without for a consideration, if it is in the course or furtherance of business, supply. If it is not in the course or furtherance of business and the recipient is government, charitable entity, or individual, then alone it is exempted. And one more point, this exemption is not available if the import of service is OIDR service. Okay, then import of service without consideration, does it amounts to supply? Yes. Even though there is no consideration, freely you are getting this service, still it can be called as supply, but there are 2 conditions to be satisfied. What is the first one? It should be from a related person, and then it should be in the course or furtherance of business. When both these conditions are satisfied, from a related person and it is in the course or furtherance of business, then it is what? Supply. Okay, and remember, whenever there is an import of service other than OIDR service, the taxability is under RCM. OIDR service also, if the importer located in India is a registered person, RCM only. If he is unregistered person or an government entity, charitable entity, then the OIDR will be paying taxes under FCM. So see what is called OIDR. OIDR na online information data access and retrieval services. OIDR na online information data access and retrieval services. What does it mean? OIDR na the such service can be delivered only using information technology by way of internet or electronic network. So you could expect a OIDR service only when you are having an internet or electronic network, and mostly these services are automated with minimal human intervention, and it is impossible to ensure in the absence of IT. You cannot expect this kind of services when there is no IT. So these are called as what? OIDR services. Then import of OIDR services or online money gaming. You need to check who is the recipient. Recipient is unregistered person, government, charitable entity, or individual other than for business purpose. Then it is taxable. Okay, but it is taxable under FCM. If the recipient is others, then also it is taxable, but taxable under RCM. Right? So till now we had this discussion in the last class. Now we'll continue with our discussion, schedule 1, sir. So some interesting topics only we are going to discuss now. These are little tricky ones. On when you're going for self-study, the area which I am going to discuss today is something you feel like little tricky and you cannot understand. So this is the place where actually the coaching would help. It doesn't mean in other places it won't work, but if you are a student who thinking of self-study also, this part you cannot understand actually. I mean, the clarity you will not get even if you refer for 4 5 times also. Schedule 1. Schedule 1 is along with 7 subsection 1 clause C. Sir, if you remember here in this chart, we have discussed about 7 subsection 1 clause A, 7 subsection 1 clause A, 7 subsection 1 clause B, whereas 7 subsection 1 clause C and schedule 1 we are not discussing here, we are discussing straight here. Okay, so what does it is? It talks about transactions which are treated as supply, transactions which are treated as supply transactions which are treated as supply even though even though there is no consideration. Transactions which are treated as supply even though there is no consideration. Transactions which are treated as supply even though there is no consideration. Okay, so these can be called as even deemed supplies. Deemed supplies, transactions which are treated as neither supply of transactions which are treated as supply even though there is no consideration. Generally, consideration is a prerequisite even in the pre-GST era for any transaction to call it as supply. But in the GST there is something very new and obviously very different than that of the previous laws, this part. So they have identified like even though there is no consideration, it's not actually passing in the form of money, but still the other person is getting benefit. Or else in some cases it's like if there is no this kind of treatment, the destination based tax principle may not work, and instead of the revenue which has to go to X state may go ending up with Y state. So to correct these situations wherever it is needed, they are identified. It's not like every transaction without consideration is supply. They have identified certain transactions where actually by not treating them as supply, the concept may not work properly. I mean, the GST flow may not go properly, or the destination based rule will not work properly. So those scenarios they are identified, and only those are treated as supply even though there is no consideration. So these activities which are in schedule 1 are called as deemed supplies. So there are only 4 kind of transactions which are mentioned in schedule 1. 4 kind of, you understand, right? Those 4 kind of, out of 4 only one thing already we discussed, which is that import of service without consideration is also treated as supply, provided it should be from what, from a related person and in the course or furtherance of business. Okay, the first one, sir. Supply of goods between principal and agent amounts to supply supply of goods between principal and agent amounts to supply even though there is no consideration. So I mean the transactions between principal and agent amounts to supply even though there is no consideration. However, invoice is the determining factor. Invoice is the determining factor. So which decides here? Invoice decides. Supply of goods between principal and agent amounts to supply even though there is no consideration. However, which is the deciding factor, sir? Invoice is the determining factor. Supply of goods between principal and agent amounts to supply even though there is no consideration. However, invoice is the determining factor. So to understand this, so I am taking 2 situations. So let us take first one, situation 1. There is a principal, there is an agent, and assume there is a customer. there's a customer. So three people are there: principal, agent, customer. So principal send goods to agent. Sent goods. Now, when the customer has approached the agent, agent sent or forwarded those goods to customer. Now the case is principal sent goods to agent, fine, and agent is sending goods to customer. This is also fine. But the thing which is needed is like how the invoice is being raised, because here if you see which is the deciding factor, sir, invoice is the determining factor. So you should check how an invoice is being raised. In scenario 1, we assume like the invoice is being raised by the principal to the customer. So invoice is raised by principal. Let's say for example, principal is located somewhere in a metro city. Example, he is somewhere, principal is located in Kolkata. Okay. Agent is located within the West Bengal only, but in a small town. So he has sent goods to agent. So here principal is the consigner, agent is the consignee. Right. Someone else goods holded by agent. Now when the customer comes, agent hands over the goods to customer. He bargains, he negotiates the price, he hands over the goods to customer. But when the time the billing comes, agent will not raise the bill on his name. How he raise the bill then? He calls to his principal or he informs it to his principal. Then the principal will raise the bill in the name of agent. So in simple, agent will complete the negotiation process, everything, and he finalizes the price. Then he called to principal. So I got a customer here for this price. So can I provide the goods to this customer? Principal, if he say yes, and he provides an invoice, such invoice he will be giving it to the customer, and the goods will be handed over to the customer. See, in this whole scenario, this middle person, even though we are referring him as agent, he is not having that actual agent capacity. He is actually working like someone like a storekeeper. If someone comes, he just opens and he shows those goods. When the bill has to be raised, he calls the principal and the principal will only raise the bill. You understanding, right? So principal sending goods to agent and agent sending goods to customer here. Whereas only one invoice is involved, only one singular invoice is involved, that also principal raising invoice in the name of customer. So there is no principal agent relationship. See, there is no principal and agent here. What happened? So agent, even though supplying or providing goods to customer, but he is nowhere raising invoice. So he is just acting as a storekeeper or such kind of, as an employee kind of. He is not raising any invoice on his name. So there is no principal and agent relationship actually exists here. Okay. So there is no principal and agent relationship. So now to declassify it, between principal and agent, whatever is happened, it is not a supply. I mean, principal and between principal and agent, the goods transfer is there, not a supply. Then between agent and customer, there is a goods transfer, that is also not a supply. Then what it is supply? Between principal and customer only, it is supply. In scenario 1, whatever the point in schedule 1 we discussed, it is not applicable. So between principal and agent, there is no consideration also. Still this schedule 1 related point does not applicable, because if the invoice is not raised by the agent, if the invoice is raised directly by the principal to the customer, even though there is no consideration between principal and agent, even though there is no consideration between principal and agent, it does not has to be treated as, it will not be treated as what? Supply. Only when the invoice is raised between principal and agent, it would be treated as supply. That's why we wrote here invoice is the determining factor. So situation 2. So what is situation 2? There is a principal who supplies goods to agent, and agent in turn supplies those goods to customer. Principal who has supplied goods to agent, and there is an agent who has supplied goods to customer. And between principal and agent, obviously there is no consideration. Without consideration only, goods has been sent to agent. Afterwards, on sale, agent will be giving back the money which has been collected from the customer. So agent post sale, he may take his commission, but now for the goods is not getting any consideration. So principal, when he is supplying goods to agent, no consideration. Agent further supplying goods to customer, obviously he will take some consideration from customer now. But if you refer here, the invoice is raised by principal in the name of agent. Invoice by principal to agent, and agent has raised invoice to customer. So what is the difference between situation 1 and 2, sir? In situation 1, there is only one invoice involved, but whereas in situation 2, there are two invoices involved. One is between principal and agent, and the next one is between agent and customer. So in this case, principal and agent relationship principal and agent relationship exists. So between principal and agent, the transaction between principal and agent, it's a supply. The transaction between principal and agent is a supply. Then the transaction between principal and customer is not a supply. The transaction between principal and customer is not a supply. But between agent and customer is again supply. So how we can decide? We can decide because there is invoice. So between principal and agent, it is supply even though no consideration. I think you are able to understand now. So, sir, why agent is not raising invoice, sir, in any case? Sir, understand why agent does not raise invoice generally. Sir, how principal will be sending goods to agent? As simple consignment only, he will be sending goods to agent. So nowhere the agent is going to pay money outright or upfront. Only when the goods got sold, he'll get money. out of that money he'll retain his commission and balance he'll giving back to the principal. So for taking the goods, maybe it takes to sell the goods for 5 months or 6 months. Till that point of time, agent is not paying anything to the principal, so there is no consideration, hence it is not a supply. When it has to be treated as supply, when the principal raises any invoice in the name of agent, then only it is treated as supply between principal and agent, even though there is no consideration involved. Okay, so to understand you further, there is a concept called sale on approval basis. There is a concept called sale on approval basis. Sale on approval basis means what? You send goods initially, okay, but the supply is happened only once the approval is happened, or approval is fructified, or approval is actually taken place. So nothing but in simple, you send goods to agent stating like you are a new company, you have come up with something new. You send the goods to the dealers who are nothing but the agents, because they will be selling your goods, but they doesn't have the market, they doesn't know the market potential of your product, so they are not aware like how this product will go into the market, so they are not ready to pay us upfront. So they said like, okay, you put your stock, okay, you put your 100 kgs of stock, or else like 100 packets over here. When it actually gets sold, then they will be paying back us the money with the consideration, by retaining their commission. So that's the principal and agent relationship here. So if that is the case, I sent goods to all my distributors and it's already 6 months done. Initially I didn't raise any invoice. What it is happened now? So they said like, you just put your goods here and go there. When any supply happens now, then we'll call you. You only raise the invoice directly to the customer. So the invoice is raising by whom? Principal to directly to the customer, not a supply. But assume in a next situation, you send the goods to agent. Agent is not selling them, but you don't know. 6 months already happened. 6 months nobody is buying. What you should have done? You should have taken back your assets or taken back your goods from the agent, but you didn't did that. What you just retained them like that. So then the law saying like, if those were not returned back within 6 months, you should mandatorily raise an invoice. When those, understand, when the items sent to agent are not taken back within 6 months, then it has to be treated as what? Supply, and you should write mandatorily invoice. So here between principal and agent, no consideration flown actually. You understand, right? I'm an agent, you are a principal, you send goods to me. I said like, I'll give you only once I sell to the customer. I didn't sold to the customer, or else even though I sold, I am saying simply like nobody is buying your goods, all these goods are lying here only. Then 6 months lapsed, but still I am saying the same answer. What you might have done before the end of 6 months, you might have taken back your goods, but you didn't did that. Then the law says like, it's something like sale on approval basis. What is the approval here? I am saying like, if customers are willing to buy, then I will give approval to you. Till that approval is not happened, you just send to me goods as a principal and agent relationship. Now 6 months also lapse. Then you need to mandatorily raise an invoice to me. Once you raise an invoice, even though there is no consideration between us, still it has to be treated as supply by applying schedule 1. What sale on approval basis says na? Invoice has to be raised on the date of approval or day succeeding to 6 months. Day succeeding to 6 months from date of removal. Okay, so we can link it with the sale on approval basis ka point as well. Now, so we are going into interesting clarifications now. So for that, I need to make sure you understand the interest and discount point once again. I already said, if you remember, interest and discount on any loan or advance is exempted. Let's say there's a bank, there's a bank which has given loan to Mr. Z. Bank has given loan to Mr. Z. Now Z will be paying loan amount, that anyhow it's not a supply because it's just repaying the money taken, so it's not loan set up, it's not supply, but there is an extra consideration involved which is interest. So to the extent of interest, it is what I said, like it's supply only, but it is not taxable. The supply is what exempted. Clear? No problem, we already had this discussion. So now we are going to a second example. There's a bank, sorry, not bank, there's an automobile showroom which sells cars. So now it sold a car, in hire purchase. It sold a car in hire purchase transaction, okay, to the same Mr. Z. He took loan and he started business. Then afterwards he went to an automobile showroom and again he took loan and he has purchased a car under hire purchase system. Now this Z paying car value plus interest. This Z is paying what? The car value also is paying and even the interest also is paying. So now understand, here also does the interest is exempted. The question is, does here also the interest is exempted? Where the interest is a standalone transaction like the first case. The first case, there is no other thing, only earning interest is the main consideration. But here for the automobile showroom, it's not just earning interest is there amount. Sold a car for hire purchase. Sir, what happens in hire purchase? There would be a hire purchase price, assume it is 25 lakhs, whereas there is a cash price which is 20 lakhs. So the difference 5 lakhs is nothing but interest only, na? So my question is whether in this case also does the interest will get exempted and only the net car value 20 lakhs alone will get taxed? Not right? Or yes? So that's the question. Okay, here interest exempted first case, no doubt about it. Does in the second case also interest is exempted? Why that question is being arised? Because here not just the interest is being earned, here the transaction involves even the supply of car and even earning interest, both are involved. So there is a service of extension of credit and there is even a supply of good. So both are involved here. Two activities or two elements, not activities, it's like here two elements. What are those two elements? One is like supply of car and second one is like extension of credit. Second one is like what? Extension of credit. Okay, so now since here both the two elements are involved, a good is involved and a service also involved, and they are naturally bundled. All these will come under the section 8, sir. I am not going more specific into that. When two or more goods and services are involved and they are naturally bundled means it's an usual thing. It's not something only happened in this transaction. It usually happens in that industry. So many automobile showrooms will sell the car on hire purchase system, automobile industries, automobile showrooms, all these things. So it's a usual thing, buying it for hire purchase. So interest is a naturally bundled thing here. So it's a composite supply. which is the main activity, sir? Yes, it's a composite supply. Out of these two, which is the main? Car value or interest? Car value. The supply of car is the main value. So principal supply is car. Principal supply is car. So on the car value, on the value of car and interest together, GST leviable. So it's not just on the car value, even on interest it is taxable. Sir, what's the difference here? You should understand. Okay, that's the essence of the point, because based on this only I need to discuss an additional clarification. If you don't understand this, that would become more tricky. Okay, so when interest you are earning as a standalone transaction, I have given 5 lakh rupees as loan to one of my friend. That fellow never repaid. That's a different story. Okay, so assume if he pays, I have given loan to one of my friend 5 lakhs. So he repays me 5 lakhs and interest of another 2 lakhs also. So that interest 2 lakhs, since it is a standalone loan transaction, whatever the consideration I get from this loan is this 2 lakhs only, interest exempted. But the other thing is like I have financed a person buying car. I sold a car and even I financed that car as well. So now when he is paying back, he is paying for me the car and even the interest part also. So here I am not just earning the interest, I even have other element like I sold the car also. Since interest is not a standalone transaction and in this whole bundle which I supplied, interest is not the main element. I mean, my business is not just earning interest, my business is selling cars. Just to complement the selling of cars or to promote the selling of cars, I even being doing this financing as well. So I'm getting additionally interest as well. So in this case, it will become a composite supply, and the principal or predominant activity is sale of car, which is taxable. So GST is leviable on both car value and even on the interest value, right? So now we are going to discuss about declaratory commission agents. Declaratory agent, this is the clarification which I want to get you understand. So what is special in declaratory agent? An usual agent, just he sells the goods to the customer and he'll inform it to the principal. If ultimately the customer fails to repay, then that risk is not with the agent, the risk lies with the principal only. You understand, right? Principal supplied goods to agent, or forwarded goods to agent. Agent supplied goods to customer. This customer actually is from the locality of agent only. Principal somewhere lying in 200 kilometers far. He doesn't know these customers. But still, when the customer has made any default, then the responsibility, the risk is with the principal only. That's the usual principal and agent relationship. But if it is a declaratory agent, the risk of default by customer is not with the principal, it is with the agent. See how it works. Declaratory agent accepts the credit risk. Credit risk. So now see clarification on scope of principal and agent relationship. Clarification of scope of principal and agent relationship in the context of del credit agent in the context of delegatory agent. See, the same, sir, the same chart which I discussed in the situation 1 and 2, I'll link it here as well. There's a principal, there's a DCA and a delegatory agent, and there is a customer. There's a principal, there is a delegatory agent, and there is a customer. This principal situation. This we already know. This situation 1. I'm linking with this situation. Principal raising directly invoice in the name of customer. Situation 1. What is the situation 2? Principal sending invoice to the DCA. DCA again raising an invoice in the name of customer. Right. Here, principal sent to DCA what? Goods. But since he is a delegatory commission agent, he supplies or he sends goods to the customer. But additionally, he even extends credit. What credit? Sir, in a normal agent, he doesn't have credit risk. 25,000 good, he'll give to agent for 25,000, customer 25,000 only. But here, agent is accepting credit risk. Ultimately, if this fellow customer defaults, who has to bear the risk? Delegatory agent. So he has to cover his credit risk. Now, for that, he'll be charging some premium. So he'll not collect usual 25,000. He'll say like 27. Why that extra 2,000? The 2,000 is his premium for accepting the credit risk. So goods plus extension of credit. That's the two services he is providing. Extension of credit. Now see, sir, we are linking these two, sir. Interest and discount one, and even this principal and agent one we are linking. Okay, so now we will categorize both separately, situation 1 and situation 2. Situation 1. And there is here we are having even situation 2. Situation 1, situation 2. So between principal and agent. So we are having between principal and agent and customer, and between principal and customer. Situation 1, sir, with whom between principal and agent, what happened? Just there is goods transfer. Goods transfer, but no invoice. Since no invoice, not a supply. Between agent and customer also. Goods transferred, but no invoice. With respect to goods transferred but no invoice. Hence, goods transferred is not a supply. But this fellow agent, he not only supplied goods, he offered credit as well. There is another thing also, extension of credit. With respect to extension of credit, sir, goods related one, it's not a supply between agent and customer. That means even though he handed over goods to customer, he has nowhere connected with the goods. Because the between agent and customer, it's not a supply of good. So there is no supply of good between agent and customer in case of situation 1. So he extended, there is an extension of credit. Extension of credit, I mean the interest part received, extension of credit, interest is exempted here. Why it is exempted? Now it's becoming a standalone transaction here, because between agent and customer we are not treating it has like supply of good. So if there is supply of good, then this interest will also add, becomes composite supply. Here there is, with respect to goods, it is not a supply between agent and customer. So only with respect to interest part we are dealing. I mean, there is a supply between agent and customer, that also exempted. Between principal and customer, invoice there, hence it is supply of goods. Supply of goods. Next, situation 2. Agent hire DCA, sir. Not just agent, DCA. Now here, principal to DCA. Situation 2. Situation 2, what happens principal to DCA? Principal to DCA, situation 2, invoice raised. So this is situation 2, sir. This below discussed one is situation 2. So between principal and DCA, delegate agent, there is invoice raised. Invoice raised. And it is what? Supply. Even though no consideration, it is supply. Now between, this is much more important, between agent and DCA. Agent and DCA, invoice raised. And there is supply of goods. There is supply of goods. Plus additionally, agent here offered what? Extended credit. And interest. And end interest. So this becomes what? Composite supply logic applies. It is also a composite supply. So interest also taxable. Here what? Interest also taxable. Now between principal and customer, no invoice involved, hence not a supply. No invoice involved, hence it is not a supply, right? No invoice involved, hence it is not a supply. This is the first one, sir. The first one only takes more time. Between principal and agent, any goods transferred between principal and agent, even though there is no consideration, it amounts to supply. But to decide actually there is principal and agent relationship or not, invoice is the deciding factor. And principal send goods to agent, no consideration. Agent again sending goods to customer, maybe consideration, but the invoice is directly raised by whom? Principal to the customer. So there is no principal and agent relationship. Between principal and agent, it is not a supply, and agent customer is also not a supply. Only between principal and customer it is supply. Then situation 2, principal sending goods to agent, agent sending goods to customer. Between principal and agent, there is no consideration, but principal raises invoice in the name of agent, agent raising invoice in the name of customer. So in this case, there is principal and agent relationship. Between principal and agent, even though no consideration, it is supply. Between agent and customer, it is anyhow supply. Okay. So now I'm going to the next one, sir. Supply of goods, services, or both between related persons supply of goods, services or both between related persons and distinct persons, related person and distinct person, amounts to supply even though no consideration, amounts to supply even though no consideration. Supply of goods, services or both between related persons and distinct persons. In between related persons, in between distinct persons, if anything happens, it amounts to supply even though there is no consideration. Okay, to explain you, let us take example of Mahindra cars na. So Mahindra showroom. Okay, this fellow is having a branch in Hyderabad and he has even a branch in Pune. There are two branches, one is in Hyderabad, the other one is in Pune. Now, this showroom actually purchased the car at Hyderabad branch first, initially from the manufacturer. The showrooms are owned by a different person, manufacturer is different. Na? It purchased the car. When purchased the car, it was received by Hyderabad branch. Na? So, destination is which? For this, destination is Hyderabad. I mean Telangana. Destination Telangana. So tax revenue went to which state? Destination state na, so Telangana. Went to TG na, Telangana state. Okay. Now a customer has approached the Pune branch. A customer approached the Pune branch and asked for a specific model of car. That car is not available with Pune branch. But since they are having a branch in Hyderabad, they called over there and asked whether such specifications related car is available. Hyderabad branch said like, yes, we are having such car. Now, Pune branch asked to send the car to, from Hyderabad branch to Pune branch. So, Pune branch asked that car to be sent there. So, then the car is a good only, mobile property, transferred. That car is transferred without any consideration. Without any consideration. So there is a interstate supply, a transfer of good between two branches without any consideration. Two branches na, this Hyderabad branch is also a registered person. This Pune branch is also a registered person. So those two are what? Distinct persons. So there is a transfer of car between two branches. Now what the provision is saying, even though there is no consideration, the transaction of like transferring the car between these two branches has to be treated as supply even though no consideration. Why sir? Why they are doing like this? Why they are doing like this na? Understand? Otherwise, the car ultimately is going to be used where, let's say for example, if you don't treat here the transaction without consideration is not a supply. If you assume, if in between Hyderabad and Pune branch, this transaction, since there is no consideration, if it is not treated as supply, the tax has been retained with the Telangana state. But ultimate destination of that car is not Telangana, it's where? Pune, Maharashtra. So the tax revenue has to accrue to which state? Maharashtra. But because the transaction is going to end in the Telangana itself, the revenue going to Telangana. But ultimately the car is being used in Pune. So revenue has to be passed on to Pune branch. So that's why in between Hyderabad and Pune branch, even though there is no consideration, in between them, this transaction still treated as supply. Now what happens? Hyderabad branch, whatever the tax it paid, I mean it has claimed by this, that would be used to set off the tax on this. Okay, this supply will become taxable. Now this tax money will be going to what? Pune state. the initially Telangana state, whatever the revenue they got, that would be reversed by GSTN. Now, since the tax is being paid here, the tax will be going to Maharashtra state. So, to work the destination based tax principle, this is needed. This is needed. So, supply of goods, services or both between related persons and distinct persons amounts to supply even though there is no consideration. There is a proviso here. There is a proviso here. So, what is the proviso? Employer employee. Okay, sir, I am not giving example, so don't think as example this one as this is the proviso. Okay, proviso to this particular schedule 1 related item. Employer and employee are related persons or not? Yes, right. So where any goods and services are supplied by employer to employee without consideration, that also amounts to what? Supply. You don't ask like, sir, it means salary. If it is salary, na, put some brain and all and think. Put some brain and think. Employee providing services, then get salary. Here, who is providing supply? Who is making supply? Employer. So, employer will become the supplier. Employee will become recipient. So, employer providing any goods or services in the name of what? Gift. Gift na usually nobody thinks like it's consideration. Okay, for your birthday or one fellow, okay, some unromantic fellow, he has February 14th, he thought of gifting something to his girlfriend. So that fellow ordered a dress or Mintra and he kept COD. How it can be called as gift, right? If you kept it as COD, you understand, right? So gift na, it should be without any consideration. But here, this fellow kept COD and he is referring to it as gift. So what you have did, man? So she is only paying na. I have selected such service. He might say, so people are intelligent na these days. So come back here. Employer providing goods and services to employee as gift. Gift na, I need not to mention again. It is without consideration. Gift. And this gift aggregate value in a financial year gifts aggregate value in a financial year less than or equal to 50,000, then not a supply. If the gift value aggregately in a financial year is less than or equal to 50,000, then it is not a supply. When it exceeds 50,000, then whole amount is supply. Not just the excess of 50,000. Whole amount has to be treated as what? Supply. So let's say this employer usually gives some gift items, sweets, something to employees for every festival. So in a year, assume, so if you count these Hindu festivals, now there are so many festivals also. Let us think about only the main festivals, not just all the festivals. Okay, like this Nagal Panchami and all not considered. Only the main things na Dashara, Diwali, Pongal. One may be something like Sri Ram Navami. Okay, so one is in January, the other one is in April, and the other ones are like in October and November. So I have skipped this Ganesh Chaturthi. Okay, we'll count them. One, Pongal, Sri Namanavami, this Ganesh Chaturthi, and Dashara, Diwali, 5. And then he is covering Christmas as well, 6. And he is covering Ramjan as well, 7. So for all these 7 festivals, he will be offering gift items now, maybe some new dress, chocolates. So those kind of some packet is giving. That packet actually worth 10,000. So that packet actually worth how much? 10,000. So in a financial year also, 7 times the festivals will come. So 7 festivals, now 7 into 10,000 is getting how much value of gifts per employee? 70,000. So it is in excess of 50,000 in a financial year. So the whole amount is supply and taxable. Sir, he got gift for no consideration. Employee didn't pay anything to employer. Still, the gift given by employer to employee amounts to supply because the 50,000 has exceeded. Let's say a gift given. He is giving everything for 1,000 rupees only. 7 times festivals came. 7 into 1,000, 7,000 only, which is within 50,000, not a supply. Okay. So now here we need to discuss a clarification also. Clarification. This clarification is about interstate movement of conveyance. Interstate movement of conveyance. Okay. So I'll explain the provision afterwards. First I'll explain it through an example. You need to understand first what I am referring. Only when you understand actually what I am referring, then you understand the essence of the concept. So there is a Chennai office. So I am taking travels. So for example, I am taking the travels of, there's so many travels like Orange Travels, Apple Travels, Morningstar Travels. So which one would be famous? Okay, let's say I'll be taking as like Orange Travels. Okay, so Orange Travels are having some buses. Okay, this Volvo kind of buses which will go between Chennai and Hyderabad. Chennai, Hyderabad. Now, the bus this bus is a good or not? Yes. Sir, it is transporting passengers. That is altogether different thing. For passenger transportation, travels and the passenger, they are the supplier and recipient. Between them there is consideration. Here, between Chennai branch, okay, this travels person is having a branch in Chennai, which is a registered person, which is registered. And even Hyderabad also is having a branch, which is also a registered person. Every day, his bus is going from one branch to another. Bus is a good, na? So see, supply of goods and services are both. Yes, there is a movement of bus between related persons. Without consideration, for sending bus from Chennai to Hyderabad, does Hyderabad branch paying any consideration? No. And again from Hyderabad, the bus being sent to Chennai, does the Chennai branch paying any consideration? No. There is a altogether different service between passenger and the transporter. That I am not talking. For sending the bus to Hyderabad, does Hyderabad branch paying anything? No, nothing paying. So no consideration between these two branches. But still, since there is a supply of good or transfer of this bus from one branch to another, it amounts to supply, right? If you apply this interpretation, so to clarify that this interpretation has been given. But bus is a good moving from one distinct person to another. Moving from one distinct person to another. Moving from one person to another. But here bus not just they are sending, sir. Bus is going from one branch to another along with the transportation of goods and passengers. So here even transportation of goods and passengers are also there. Sir, let's say the bus cost is 60 lakhs, sir. The bus every day will go to Chennai to Hyderabad. I mean, one day it will go to Chennai and Hyderabad. The other day it starts from Hyderabad and come to Chennai. And again the alternative day it again starts from Chennai and it will go to Hyderabad. Like that the buses keep on moving. So from this side to that side it went on 60 lakhs GST, and again from that side to if it comes here again on 60 lakhs GST, then this will never end. At least this travels fellow will be having some 10-15 buses. Think from Indian Railways perspective. Every railway station is a place of business. Just like as bus depots owning buses, even the trains also owned by different stations. Some trains are owned by Secunderabad railway station. Some trains are owned by they will be the one who will be managing those trains, right? So some trains may be owned by Vizag station. Some trains may be owned by Chennai. Okay, so if these trains are moving from one station to another, they'll be going from Chennai to Delhi, Chennai to Mumbai. The trains will be moving now. Will it be treated as supply? Always like on the train value will be levying GST? No, right? But there is the transfer of good. Train itself is also good because it's a mobile property which is moving from one distinct person to another distinct person. Does it amount to supply? If you read this provision and if you apply it, then it holds good even in this case also. But it's meaningless. Every day you levying tax on train value. Every day you levying tax on the bus value, on the trucks values. It's not feasible, right? So that's why they are given this clarification clearly stating like where there is an interstate movement of conveyance. Where there is interstate movement of conveyance. What is conveyance, sir? Conveyance means it may be a train. Conveyance means it may be a train or it may be a bus. Conveyance means it may be a train or it may be a bus or it may be a truck or it can be even a aircraft. Okay, all these will come under the conveyance only. When this conveyance is moving, interstate movement of conveyance among distinct persons. Among DPs. But the purpose of moving is what? That we need to understand. If the purpose of moving is like for carrying goods and passengers, it went not just to stay in the other branch. It went just to carry passengers or goods and again it come back. For carrying goods and passengers, then it is not a supply. For carrying goods and passengers, then it is not a supply. Or else if it is sent for repairs. For repairs. Okay, let's say from Chennai to Hyderabad, the bus was sent to carry out repairs in Hyderabad. Then when it is coming back from Hyderabad to Chennai, only to the extent of repair value you need to levy GST. Okay, only supply. It is supply but only to the extent of supply only to the extent of repairs. Then for further supply na This car is, this truck or conveyance is sent to another branch to dispose there, to sell there. So from Chennai, you send a bus to Hyderabad. It's not just for transportation of passengers. The bus will be sold in Hyderabad itself. So then for further supply, then in such case, supply for the total conveyance value. Then permanent transfer last one, sir. In schedule 3, we have already covered 4. What are those 4? Import of services without consideration. Goods transfer between principal and agent. Third one, interstate movement of goods or services between related persons or distinct persons. These 3 amounts to supply. Now the fourth one, sir. Fourth one is what? Permanent transfer or disposal of business assets. On which ITC claimed permanent transfer or disposal of business assets on which ITC claimed is a supply. Permanent transfer or disposal of business assets on which ITC claimed is a supply, even though no consideration involved. Even though no consideration involved. So we need to understand what actually seems to be permanent transfer or disposal. Permanent transfer or disposal of business assets on which ITC claim amounts to supply even though there is no consideration. See here, example. There is a store called Ram Electronics. Okay, so this Ram Electronics purchased 10 air conditioners. Purchased 10 air conditioners, and on this purchase ITC also availed. Input tax credit availed. Now, why ITC is usually given, sir? To avoid double taxation. Okay, it shouldn't, when on inward it got taxed and again on outward also it's getting taxed. So it's getting taxed for twice now. So to eliminate such double taxation, the tax paid on inward is given as credit, which would be eligible for set off on our outward supply. So Ram Electronics, how to sell this car? Sell these air conditioners. Then only there will be double taxation. But what happening now to Ram Electronics? Out of this 10 air conditioners, one air conditioner donated to a orphanage, something. One air conditioner donated. One air conditioner given as gift. Okay, some of his friend is getting married, so he gifted air conditioner. One AC gifted. One AC he transferred to his residence. His residence he transferred. Then 2 TVs found theft. Poor fellow. Sorry, not 2 TVs, 2 air conditioners theft. And one air conditioner got damaged. Okay, there is movie in Telugu, maybe it released in Tamil also, acted by Dulquer Salman, Lucky Bhaskar. So this is something like Unlucky Ram. Okay, one AC donated, One AC gifted, one AC transferred to residence, two ACs got theft, and one AC damaged. The other four ACs he sold. Sir, with respect to this four ACs, no problem because he is having consideration. No issues with them. He can avail ITC, he sold them. But with respect to this four, already ITC availed. But does he using these four or this six air conditioner for the purpose of business? No. Are they retained in the business? No. They went out from the business. Will they come back? You donated to someone, sir. Can you get it back again? You gifted to someone. It's not like something like you giving chocolate to your friend in the third standard or second standard. Whenever you have a fight, you can simply say like, give back my chocolate. I have given you on that day two chocolates, but now you are not sharing with me now, so give back my chocolate. So that and all you cannot do. Once you grow. So once you gifted, it's gifted. So you cannot again take it back. So donated, gift, transferred to residence permanently, and then theft, damaged. So all these went from your business permanently out of your business. So you cannot again take back them. There is a permanent transfer. So it amounts to what? Permanent transfer or disposal. So ITC should not be given to you actually. But what they are giving, like they'll give ITC. But even though there is no consideration involved in these activities, still it would be treated as supply. So again there will be tax na. So instead of not escaping from double taxation, they are again getting it taxed. So that's why they are giving you the ITC benefit. So amounts to permanent transfer or disposal. Amounts to permanent transfer or disposal, hence it is a supply, even no consideration. Where it is covered? It is covered under Schedule 1. Then we are moving into, sir, we have completed 7 subsection 1 now. So now we are moving into 7 subsection 1 clause A. Section 7 subsection A along with schedule 2. Small concept only, sir. You can finish off now. 7 subsection 1A schedule 2. So what it is like, it says like, what's the role of this one? You already decided as supply under 7 subsection 1 clause A, clause AA, clause B or clause C. If your transaction covers any of those items, it amounts to supply. Okay, you already concluded it as supply, but the question is whether it's supply of good or supply of service. That will be deciding based on 7 subsection 1A and schedule 2. Supply to be classified as supply of good or service. Supply to be classified as supply of good or service. Okay, so now I have been summarizing this, sir. Actually, I'll show it in the material also, schedule 2, which would be more detailed. We'll refer in the material also. I'll read out that schedule 2 points also for you to have better understanding, but we'll write down the summary here. With respect to any transaction where the ownership of the good, title of the good is being transferred. Ownership title of good is transferred. Then that is supply of goods. Only possession got transferred. not ownership. Only possession got transferred, not ownership. Possession, so let's say these Zoom cars, rental cars are available. You took that car. Okay, so you're going on a trip, you took that rental car. So now understand, when you take that car, does the ownership will give it to you? Does they give the ownership to you? No, right? You're just getting what? The possession. You could use that. You're not getting the ownership. So only possession got transferred, not ownership. So it is what? It's a supply of service. It's a supply of service. One second, sir. It's a supply of service. Then, if it's a composite supply, it involves both transfer of goods and services. It's a composite supply. Composite supply means what happens, sir? It involves both supply of goods and services. Let's say, for example, works contract. Works contract means what? It's a contract related to immovable property which involves both supply of goods and services, right? But it should be treated as what? Supply of service. That's what mentioned in Schedule 3. Supply of service. Then, restaurants. Supplying food and beverages. Okay. So here also it needs to be treated as what? Supply of service only. Supply of service. I mean, the goods will be cooked, processed in a way so which would be more attractive, more tasty and delicious for you. So such way they are even offering service also. So and they think the predominant thing is like service, so it should be treated as what? Supply of service only. So ownership title of good is transferred, then it is supply of good. Only possession got transferred, not ownership, then it's supply of service. Composite supply, it's a works contract, then it's supply of service. Restaurant supplying food and beverages, then it's a supply of service. Then with respect to intangibles, sir, understand here which involves a degree of processing and there should be some dining space. The ambience shall also be provided, just not the food being processed. That ambience, the dining space, everything should be provided. Then also they are actually classified as restaurants, then they are treated as supply of service. Whereas if an ice cream parlor supplying ice cream, there will be some little place to sit over, but still ice cream parlors, bakeries, they will also be supplying food and beverages, but they are not restaurants. Ice cream parlors, bakeries, they also supply food and beverages, but they are not restaurants. Then what they are offering is na supply of goods. It's supply of goods only. So restaurant supplying a biryani, a sambar rice, that amounts to supply of service. But a bakery offering a dil kush, dil pasand, this kind of puffs will be there, na? So that amounts to supply of good only. Okay. Then let me take about intangibles here. Intangibles na softwares, patents, trademarks, those things. Intangibles, if it is a pre-packed software, I mean it's a software which is loaded into a hard disk pen drive or any other kind of CD, and then it's being sold prepacked software. These days we cannot see these kind of things much, sir, but down the line, so when you went back little back to the past, some 5 years back, 10 years back, these OS, Microsoft operating system OS, or any other gaming softwares. So if you remember playing this video game like Super Mario, you could connect it to the TV and then you could play this Super Mario, right? For that, for each game there used to be some kind of cassette which you need to keep there. So that is nothing but a software, right? That game is nothing but a software, but that was loaded into a hard disk or pen drive, some chip kind of thing, right? So it is having some tangibleness, so it has to be treated as what? Good. But nowadays we are everything downloading from online. If it is downloading from online, it is supply of service. But when you are buying something like a loaded into pen drive, loaded in a hard disk, loaded in a CD kind of, then that is prepacked software. Supply of good. Other intangibles now, they could be franchise, giving franchise. I mean, your name using by some other. So you could see in Andhra Telangana there are so many tea times. Okay, the traditional tea shops and all gone. Now everywhere the tea times is only trending. So they don't just sell the normal standard tea. They'll sell badam tea, green tea, different types of tea, coffee, other other beverages also, something like the lassi related things. So all these, there's a franchise thing going on here. I just said an example for so many things. Domino's franchises will go, McDonald's franchises will be there. So you are using someone else's brand and someone else's recipe, for that you will be paying some amount. Then that is called as franchising. And development of a software, patent, trademark, okay, any others other than prepacked software will amount to supply of service. 2 minutes, sir, just 2 minutes. I know it's already 9, just 2 minutes. We'll read out in the material also, otherwise it remains to me as pending only. So schedule T, if you see, when there is a transfer of title, I mean the summary we wrote, sir, the detailed version is this table. There is a transfer of title in the goods. Title is being transferred, so it's a supply of good. There is a transfer of right in goods or share without transfer of title. So title is not getting transferred, ownership not transferring, so it's what? Supply of service. Then transfer of title in goods under an agreement. So title is being transferred, but under agreement that it shall pass at a future date. It's nothing but na hire purchase. In hire purchase, when you get the ownership, sir, you will be getting the ownership on payment of last installment. But on paying last installment, it's not optional to the hire vendor saying like, I'll not give the ownership to you. He has to give the ownership absolutely. It's your machine or your vehicle. So on payment of last installment, you'll become owner. Such agreement will be entered before itself. So whether the ownership is being transferred today or tomorrow, the ownership is being transferred now, so it's what? Supply of good. Land and building, lease, tenancy, license, ownership will not get transferred, so supply of service. Lease or letting being including for business or commercial or personal process, whatever it is. Okay, so here it is supply of service. Then any treatment or process which is applied to another person's goods, something like job work or repair kind of activities, ownership is not being transferred, supply of service. Transfer of business assets, when you are permanently transferring or disposing, so you gifted some good, so now who is the owner? The one who took the gift only, right? So then once it is a permanent transfer or disposal, ownership is getting transferred, so it is supply of good. Renting of immovable property, when you took a building on rent, you will not become owner. If that is the case, now all the tenants will be so happy, nobody will be giving us for rent. So renting of immovable property, ownership not transferred, supply of service. Construction, Okay, no goods involved. Supply of service. Temporary transfer or permitting the usage of intellectual property right, patent, trademark. Supply of service. Development of a software. Supply of service. Agreeing the obligation to refraining from an act, not doing an act, tolerating an act. So here in this case, no good itself is involved, no tangible item is involved. So it is what? Supply of service. Transfer of right to use any goods for any purpose or deferred payment or other valuable consideration. Only right to use. Supply of service. If it is a works contract, I already said supply of service. Supply of food for human consumption by restaurants or any drink, then that is also supply of service. So this table is the schedule 2 related summary. So tomorrow we could start with this 7 subsection to negative list. Once we complete that, we could even complete the composite and mixed supply. So tomorrow we could end up the provisional sections related core part. Then still the chapter is so much, sir. There are so many clarifications. We need to discuss the advanced rulings. Some judicial pronouncements are there that we need to discuss, and the problems we have to do. Still the chapter is there. Another minimum of 3 classes it will take. So be attentive. And as again, every class I will be saying this thing only. Revise at least for half an hour once the class gets completed. Thank you.